Hello, everyone, and thank you all for joining us. This is Moneyline with Nancy, coming to you live from the nation's capital, Abuja. I am Nancy Nneji, and it's another day of business, finance, economy, market, as well as investment. Today, we are looking at the monetary policy angle, the monetary policy dilemma that we have been suffering, at least in the last, since inflation rose, at least for the past 2.5 years. Nigeria's central bank has been trying to battle this Hydra-headed challenge, and I know why I'm calling it Hydra-headed, but my guest is joining me right now, and we need to get started. Thereafter, I'll be taking you through some other things that we've prepared for you today. Tilewa Adebajo, the Chief Executive Officer at the CFG Advisory, is joining me right now virtually from Lagos. Hello, Mr. Adebajo, and thanks for joining us.
Hello, good morning, Nancy.
Good morning. Let's get started. How challenging is this monetary policy dilemma? Because even from my own position, I've been trying to analyze, study, take a look at the behavior of the central bank, at least in the last 2.5 years, in terms of inflation, fighting inflation, in terms of price stability, as well as even balancing financial stability on one hand. If we have time, we'll go into that a bit. How challenging do you think that how challenging is it for the Apex Bank right now, handling monetary policy?
Thank you very much, Nancy. The challenges are not insurmountable. Let's start with that. The problem we have are self-inflicted. As you know, the biggest challenge facing the central bank now is runaway inflation.
Yeah.
The economy is in stagflation. And stagflation is defined as low growth, high unemployment, and high inflation. So in a situation like that, you first of all ask yourself, what happens? All the inflation in Nigeria is cost push driven inflation. First of all, from food inflation, which came through. Then, of course, the fuel subsidy was removed, which also had another impact. So those are the two factors that are driving inflation. The third factor that is driving inflation comes from the fiscal side and also from the central bank itself, which is the irony, which is the 30 trillion ways and means financing that the central bank gave to the federal government of Nigeria. So those three factors are what is causing inflation at the moment. So in order to address inflation, you need to take a look at those three items and see what you are going to do. And the clear policy tools are there.
The clear policy tools are there. How do you expect the Cardoso-led Central Bank of Nigeria to address these issues? However, you've said that they are surmountable. These challenges are surmountable. From my own position also, I see that they might not be short-term, because from what you have reeled out earlier, there are also some legacy as well as structural factors that have impacted inflation and still are doing that now. How do you expect a Cardoso-led central bank to be able to handle all these complexities vis-a-vis a president that wants a thorough house cleaning of monetary policy? Because that's what President Tinubu said at the Eagle Square on May 29th of this year. That monetary policy needs house cleaning. And of course, he did say that interest rates that are high are not favorable for business. So Mr. President expects that interest rates in the country should not be as high as they are to promote employment and to promote the easy flow of credit. So how will a Cardoso handle this when you have runaway inflation at 18.75%? At noontime now, at 12 noon, just a few minutes from now, about 50 minutes from now, MBS would announce inflation numbers. And I can tell you that it might increase. If it does not, this will be my surprise. So how do you expect Cardoso to handle this?
Well, I think, first of all, the inflation numbers are closer to 30% plus than what we are being told right now. Because if you take a look at the basket of any services in Nigeria today, you'll understand that inflation is way above 30%. And I think we need to focus on that reality in order for us to address the challenges. Now, if you are in an inflationary environment, you find a situation whereby real rates and real yields are positive because the NPR rates are not even at 20%. So the real yields are negative. The yield curve is also negative. So basically, that is what another challenge, because returns for investors are negative. So we are not creating value. So that is a problem. In order for us to address that, while the president might desire, lower interest in the longer run, we still have to go through an 18-month period whereby we need to increase rates to ensure that real yields are in positive territory.
Why did you say that 18 months? Sorry to cut you short. Why did you say 18 months?
18 months is basically from my own modeling in terms of if we start doing the right things now, and I mean that when you look at putting a policy consistency for within the next 18 months, you can now begin to see results. If you take a look at the trends in Nigeria, at a point in time in 2014, the economy grew 18.5%, inflation was 11%. So there's a positive correlation between GDP growth and high levels of inflation. So at inflation rates of 30%, we're not going to see that GDP growth. So inflation has to go down to 11% at the minimum for us to see meaningful GDP growth. And to do that, we need to increase rates in the medium term. That is within the next 18 months to be able to force down the inflation rates. So that's number one. The second thing that needs to be done is that the president also needs to control fiscal spending, which is more in his control. Ways and means financing has to stop. It is the government spending that is driving inflation and is causing problems with monetary policies. So in terms of the fiscal restructuring and the structural reforms that the economy needs, the government has to have the ways, the means, and the political will to go through those structural reforms. And number one, you need to stop ways and means financing, which is currently at 30 trillion. And the 30 trillion ways and means financing, as we know, is illegal because right now that is 30 times the limit according to Section 38 of the CBN Act. So, that is a major challenge that they also need to address. So, and then the structural reforms from the government needs to be done. The foreign exchange system will evolve. But basically what we're saying is the fact that the classical tool is that interest rates will have to go up first in the medium term before it comes down on the short term to see that. And we need to have consistent monetary policy over the next 18 months for us to begin to see the desired results. So it's a very simple process.
I don't know if it's as simple as you say it, because in that simplicity is a whole lot of process. And of course, there'll always be economic impact of whatever decisions that the monetary policy authorities come up with. Now, with what you have said, let's paint a scenario. A president that wants lower interest rates and thorough house cleaning. From your own analysis, a central banker that should look at the next 18 months, of course, rates should be raised to be able to control inflation, though that we've seen an opposite in the last few months also, at least in the last, I think from May, when interest rates have started rising, we saw inflation also rising, though the central bank at the time did support that argument that if it was not also raising interest rates, inflation would be more runaway than we have it right now. So how do you see the Central Bank of Nigeria handling a delicate balance of growth, inflation of over 26%, that is hurting growth, the balance sheet of the Central Bank of Nigeria that was just released a few months ago in terms of telling us what has happened in the last 7 or 8 years. You've also mentioned the ways and means advances to the federal government. How does the Apex Bank handle all these complexities while not hurting growth with its decisions and still maintaining apparent transparency, not also leaving financial stability? Because if you take a look at their mandate, promoting a sound financial system is part of the central bank's mandate. These complexities at this point, huge.
Again, Nancy, I say it is a very simple process. It's about consistency with monetary policy. Because right now, in order for the biggest problem hurting Nigeria now is inflation. It's hurting all the assets, it's hurting everybody because returns are negative. And that is why it's also putting pressure on the dollar. So everybody now wants to get dollars so that they can have a store of value. That is the only investment that is inflation proof. Because if inflation is at 27%, then your interest.
Okay, it seems the network just froze on us there. Mr. Adebajo, can you still hear me?
So that's
okay,
why,
I can hear you
that's
now.
why we're saying that over the next 18 months, you have to steadily raise interest rates. As you can see now, the central bank is now using their tools, the open market operation. So if you take a look at the last open market operation auction, the last instrument was offered at close to 20%. So these are gradual steps in which the central bank is using to signal the market. And like I said, the central bank is not about talking. It's about sending signals to the market through things like the open market operation, which are the classic monetary policy implementation tools. Do that and get things going. So central bank can do their interest rates increase, but again, if the fiscal side and the structural reforms necessary on the fiscal sides are not being taken about, you're going to begin to put pressure, because if government begins to borrow more money and put more money into the system, then you're going to continue to fuel inflation and it will be a zero-sum game. So the choices are there. 18 months of consistent policy, after which we can now begin to see rates come down, and then you can now begin to see some sort of structured and sustained growth. Now, so like I said, it's not rocket science.
Now, for what you have, for your postulation for this to work, you must have a responsible fiscal authority. Are you seeing that?
Exactly.
Yes. Are you seeing that responsible fiscal authority now under President Tinubu? Because we still have a huge fiscal deficit. President Tinubu just signed his supplementary budget, and that budget, of course, will be borrowed. Then we also have an inflow of $10 billion. I listened to the Central Bank Governor Yemi Cardoso at the NESG, that's the Nigeria Economic Summit, where he talked about, of course, inflow that we're expecting. Now, a lot of people are also saying that after that, what's next? So within the complexity of just what I've mentioned, how do you see it playing out? And let me also add this, dovetailing from what you said earlier in terms of the tools that the central bank is using right now. Do you think that the central bank's tools will still be effective moving forward? Now, let's take a look at some of those tools. They are adjusting interest rates, cash reserve ratio at 32.5%, the liquidity ratio at 30%. Are those tools still, will they still be potent, even though I also heard you clearly that interest rates should still be raised between now and the next 18 months?
Yes, I think the primary tool for CBN operations should be the open market operations, which is what they're using now, and we're beginning to see rates rise in that to send signals to the market in terms of rate movement, and I think that is effective. I also want us to separate the issue of fiscal policy from monetary policy and draw a very clean line. What the central bank has also started doing is to clear the backlog of the forward contracts. That is also a process that is continuous, which they have a program, and I think they're doing that. And I think the central bank governor says clearly that he's going to come out with a very nice, aesthetically packaged set of new rules for the foreign exchange market. So you can begin to see that they begin to clear those backlogs, you know, and obviously it's happening on a regular interval. So obviously they have a program and a structure to clear that. So that's for the foreign exchange, and that is bringing confidence to the foreign exchange market. So that is what the central bank is doing. All the other CRRs and all those other things, yes, I think they're in place to be able to control liquidity into the system, and those tools are being used. One that hadn't been used before was the open market operations, which is now there. And I think it's important for us to separate that from the fiscal policy. What you're talking about in terms of clearing the foreign exchange rates, which they're doing, which is a financial stability function that has started. The most important thing, as you've said, is that fiscal stability and fiscal responsibility, I think, is the Achilles heel. The current budget is 26 trillion in terms of revenues. In terms of budget, 17 trillion in revenues, and they're looking at a 9 trillion deficit. But with this 2 trillion supplementary budget, they're going to be carrying close to a 15 trillion deficit over from last year. So that is really where you have the challenge. And the biggest challenge for the government is that if you take a look at the medium-term economic framework, within the next year or so, debt service is going to be higher than recurrent expenditure. So that really is where the red flag is in terms of fiscal expenditure, when debt service becomes higher than recurrent expenditure. So we have significant challenges. So the projections for revenue from the medium-term economic framework is not very positive in the sense that debt service is more than recurrent and capital expenditure.
Now, Mr. Adebajo, are you expecting anytime soon for the MPC to meet? Because the last MPC we had was in July. And of course, it was perhaps understandable at that time that the ex-while governor of the central bank, of course, out. There's a new man at the helm of affairs. So we were expecting to see a monetary policy meeting in September and in November. And I really had to look through what the MPC is about. And perhaps for the benefit of our viewers, of course, we've always talked about it here on the program. The MPC, of course, is constituted of the governor of the central bank, the 4 deputy governors of the bank, the 2 members of the board of directors of the bank, 3 members appointed by the president, and 2 members appointed by the governor. The MPC is the highest decision-making, policy-making committee of the bank with about 4 or 5 mandates. And one of those mandates are the MPC meets bi-monthly. That's what is written. The MPC meets bi-monthly, except otherwise in the event of an emergency. And if you take a look at the definition of bi-monthly, it could be twice a month or once every 2 months. And that was the tradition that we've had, I think, since the MPC started in 2005, if I'm not mistaken. So we have MPC 6 times a year. This year, we've just had 4 times. Are you expecting a direction of the MPC, especially under this leadership of Cardoso? Or should we just leave it like that and say it's enough for the year? What kind of signal would that send to the market too?
Well, we can't leave it like that, I think, because an MPC was due before they came. And I think that what is important, first of all, I think the challenges are quite significant. So I think, and in fairness to the new team, you know, if you see the CBN balance sheet needs to be restructured. So I think it is important that they complete their review, extensive review, of, first of all, of how they want to restructure the central bank balance sheet. Is very important. I think that's number 1. Number 2, they need to look at their foreign exchange regime and perfect it, because it's not, I wouldn't like to see an MPC meeting for the sake of meeting a schedule. If the new team has come in, then go back and do all the hard work. Let them do a thorough analysis of the balance sheet of the central bank. Let them do a thorough review of their reserve management. We need to know the real levels of the reserves. Let them do a thorough review of the ways and means, which is now 30 trillion, which is 30 times above the limits. Let them do a thorough review of their FX policy and the new FX system they want to put into the market. So I think it's important for us to give them time for them to complete an extensive review so that when they come out with a new MPC policy, it's a comprehensive review and a true position of things, so that we're not seeing that they're just doing something for the sake of it, and then they have to go back and come back and say something else. So let them complete all the reviews they need to do. And then hopefully, at least before the end of this year, we can see an MPC meeting. And then secondly, also don't forget that the CBN board has not been appointed. So several members will be absent from the Monetary Policy Committee. By statutes, we know that the central bank governor and the 4 deputy governors will be on a member of the Monetary Policy Committee. The central bank governor can appoint 3 members. The president can appoint 2, and then some members from the board or non-executive members of the board of the
but
central
you have
bank
statutory members of the board who are, of course, Minister of Finance is also there and all that.
Yeah, but what I'm trying to say is that there are also some people that are missing. So it's also important that we get everybody in place so that we can get something going. But at the end of the day, the people who are in charge now, what is important is that let them do their review so that we understand exactly, first of all, the new foreign exchange regime, the restructuring of the balance sheet, reserve management, financial stability, and they can come to tell us exactly how they want to tackle inflation. But you can already see with what they're doing with open market operations and their activities in the foreign exchange market, the direction they're going. So I think we should also look at what they're doing and how the central bank is intervening in the market, because central bank doesn't need to talk too much also. You can follow the activities by how they're intervening in the market, clearing the FX backlog, open market operations, the instruments, the pricing is going up now at 20%. So you can begin to see what they're doing. And, now they're looking at tightening up, cleaning up their balance sheet, and, clearing all the FX deliverables, the swaps and the deliverables that are overdue. So, those are the sort of things that is going to gradually restore confidence into the market. But there's still a lot of institutional issues that needs to be set up. And I think that it will be good that that institutional setup is in place instead of hurriedly doing a monetary policy committee meeting. So, the other members of the central bank, in terms of governance, need also to be in place, because we want to know what sort of credible people are going to come on the board of the central bank, so that we don't repeat a situation whereby the central bank governor is violating Section 38 of the CBN Act and is not, acting and is not acting in line with proper corporate governance and compliance procedures. So the governance structure within the central bank is also very important now to restore confidence going forward. So I think what I would say is that while that is on, let us begin to study how the central bank is intervening in the markets.
Okay. Just before we go, I know I'll have to let you go soon. There's a question that came in on social media. Let me take it. Let me just pose it to you. Aguya Mustafa says, please help ask your guest that will heaven fall if the CBN suddenly says the exchange rate has been reduced to maybe 300 naira per dollar. Apparently, we need to do a lot in terms of information, in terms of, public enlightenment on how exchange rate works. But please, can you explain, can you answer Aguya Mustafa? He's sending this on Twitter. Will heaven fall if the CBN suddenly says it's not 300 naira to $1?
No, I think the central bank is not going to say that. And I think we should try to remove speculation and fantasy from this process. It's a very serious process. We need to understand the issues. There are challenges with foreign exchange supply. The central bank is trying to obviously shore up supply, and the backlog that they have, they're gradually trying to clear it. But more importantly, the central bank is moving to a new foreign exchange management system, which they will announce soon, according to them. But basically, they've removed all the multiple windows, so we have a single window. And what the central bank is trying to do is to create one foreign exchange market in Nigeria, which is an interbank system. And another positive development is the fact that you can transfer dollars or any foreign currency from one domiciliary account to another domiciliary account, which is positive, because if you send me dollars and I want to send my dollars to you, you can transfer Naira to my account, and then I can transfer the dollars to your dollar domiciliary account instead of trying to withdraw those dollars and go to change it on the parallel markets. So a lot of all these systems are what we'll do. But what the person should also realize is that markets determine rates. So you should follow the foreign exchange markets, get into the IFX window and understand the dynamics to say, okay, what is the demand and what is the supply? So just like with the stock market, the The Nigerian Stock Exchange cannot just come and say that the market cap is going to go up or go down by some amount. There are rules and regulations that guide how market mechanisms work. And it's important for all of us to realize that so that we remove speculation from the markets.
Apparently, we still need to do a lot of public enlightenment because many Nigerians, yes, do not understand perhaps even how the central bank works, their policies, their programs, how it impacts our everyday lives. And we'll continue to educate Nigerians on that. Just before you go, we have about 2 minutes or 3 minutes to go. I would like you to comment on perhaps the dollarization of the Nigerian economy that we've seen, at least in recent years. How do you think is hurting the Nigerian economy and also hurting the mandate of the central bank in terms of maintaining price stability and in terms of having the Naira as the legal tender of the country? I see a lot of things even now on social media, people saying that they don't charge in Naira again. You see their prices, they put it in dollars. And they justify those reasons because that the Naira is depreciating on a daily basis. I would like your comment on this. And do you think that the central bank has anything to do concerning that, perhaps in terms of education or enlightenment?
Well, I think what I agree with you is that there's a need for a lot of public enlightenment from the central bank and the monetary authorities, even the Ministry of Finance, and even the government as a whole in terms of trying to get Nigerians to understand their economic reform, not propaganda, not a presidential spokesman coming out to say this, that president had made one order or president. No, you need proper enlightenment. You need to be able to get people to understand your policies and what you're trying to do, because the next 18 months are not going to be easy. But having said that, I think what we must also understand is that dollarization, there is no dollarization of an economy. Nigeria's economy is not dollarized because dollar is not the legal tender in Nigeria.
Are you saying that there's no dollarization of the Nigerian economy?
No,
I'm trying to understand because in Zimbabwe, for example, years past, and even now, Zimbabwe economy is dollarized.
No, it's not. Let me just explain it.
Okay.
Okay. The reason is that people use foreign exchange to import certain things. Okay. If you go to a buka now and you are going to eat yam, pounded yam, egusi with palm oil and goat, okay, there's Naira. There's no import content to that. And it is this food security that we have that is keeping Nigeria together now. That is not, there's nothing to do with dollar there. But when you want to go and buy a Toyota Corolla or you want to go and buy some imported goods in a supermarket or something that has an import content, the person who is importing those goods is conscious of foreign exchange rates because he doesn't want to lose money.
So would you say that we have dollarization in some sectors?
No, it's not dollarization.
Or the use of...
No. Nancy, let me finish.
Yes.
Let me make this important point. Because we like to use words that we don't know about in Nigeria. And I don't want to be... Okay? What I'm just saying is that when people are selling goods that have a dollar import content, it's not dollarization, it's a benchmark. Because when that person is going to replace their goods, they want to be able to ensure that they are doing it at a rate for the dollar depreciation or appreciation so they don't lose money. So don't let us confuse people trying to benchmark dollars for replacement cost to dollarization.
Yes, I understand.
It's not.
Yes, Mr. Adebajo, I understand that.
No
I am saying.
So
okay, so what will you call it? What will you give me a word?
Benchmark for replacement cost.
Okay, what will you call it?
You are just using the dollar as a benchmark rate for your replacement cost. That's all. Because you are going to.
Mr. Adebajo, do you understand that there are some people? There are some sectors. Let me take an example. Even some schools take dollars as school fees in this country. There are some products that you will. Yeah,
it's
good. That's actually what I mean. That they will say, okay, it's $50 and don't pay me in Naira. Go and exchange your Naira and give me $50. In this country, even in this Abuja.
That is wrong.
That's actually what I wanted you to comment on.
You see, and don't let us take isolated incidents of the elites of Nigeria as a norm.
But the elites are setting a very bad example.
There are 200 million people in Nigeria today. And out of the 200 million people in Nigeria, most people are going about their business on a Naira level. It is the elites that have the propensity to consume imported goods. So those importers of those goods have to benchmark their dollars, their pricing on dollars based on replacement cost. If you're going to import a machinery, you have to know that, okay, if I'm going to import it, the dollar would have gone up maybe in another week. So you want to be able to make sure your pricing reflects either the devaluation or the appreciation of the naira, so you don't lose money. So don't let's confuse that for dollarization. If any school in Abuja is charging in dollars, then they should shut them down.
No. Yeah.
So it's against the law. So let us get it straight and stop talking about dollarization when what it is just using dollars as a benchmark for your replacement cost. There's nothing wrong with that. That is standard business.
Exactly, there's nothing wrong with that, but it's just collecting dollars
but
in the country where the legal tender is naira. Because in the US, yeah, I understand what you're saying, Mr. Adebajo. I'm just saying that when you go to the US, for example, and you want to transact a business, they will not collect naira. So it's senseless for me as a Nigerian in here. I want to buy a service or a product, and you're telling me I should, the naira I have, let me go and exchange it and give you dollars. It's happening here. But I am just saying, because these are the things happening. These are the things happening here.
Or any of the authorities arrested the proprietor of that school?
We've been trying as much as possible to, come up with public enlightenment and tell people that the naira is the legal tender, of course, mandated by the Central Bank of Nigeria. That's our legal currency. But anyway, Mr. Adebajo, I think we'll leave it at that so that we don't extend this discussion because I know you have to go. And I see that the discussion is becoming interesting also for you. But
it is because
you see that, but you have to go.
We need to go, but unfortunately, that will have to be for a next time.
Another edition. Thank you very much for coming on the program, and I hope you had a wonderful session with me. We'll continue this our conversation.
As always, I always enjoy coming on your program. You know that.
Thank you. Thank you very much.
Have a lovely day.
Thank you. Thank you to you too. All right. Anyway. Mr. Adebajo has been speaking to me. Tilewa Adebajo is the Chief Executive Officer at the CFG Advisory, and we've been talking about monetary policy hurdles, monetary policy challenges. Of course, we looked at the issue of foreign exchange. We looked at the issue of balancing monetary policy, price stability, financial stability, and not hurting growth. Nigeria is currently at a GDP growth of 2.3%. That's according to the MBS. For the second quarter, we grew at 2.5%. In the first quarter of this year. We're yet to see the third quarter numbers, and of course we are in the fourth quarter, but if we take a look at the trend, perhaps at the end of the year, Nigeria will still be doing about 2% or a little bit above 2%. That's my own postulation, but in case anything happens, anything positive will be very good for